So despite being super new at the public market and selling off after initial spikes in February, WISH stock is just going insane right now. In the first days of the month alone, it almost performed an astonishing 40%, currently trading at around $10.50 today. So what we are going to do today is give you an updated insight into what is happening to the stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us, but also you. So there is really no excuse for not smashing the subscribe button, it's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. So it's pretty obvious that ContextLogic, which basically is the company that owns WISH, is an absolutely insane one. In its IPO filing, it claimed WISH was the most downloaded global shopping app for each of the last 3 years, with over 100 million monthly active users in more than 100 countries. The company also differentiates itself from other e-commerce marketplaces, with its emphasis on personalized visual browsing instead of traditional searches. But WISH stock hasn't been having a terrific time since its IPO in late 2020. In fact, on its first day of trading back in December, the price of the stock dropped 16% below its initial offering. The stock's value only eclipsed its $25 IPO price once, for a brief few days in January, fueled by the pump of GameStop and other early meme stocks. Additionally, the company has seen a fair share of criticism that justifies the price floundering. Many, and this is crucial to consider for our prediction at the end of the video, see the retailer as an inferior imitation of Amazon. Business Insider went so far as to directly compare the experience of shopping on both platforms and came to the conclusion that WISH fails to capture the same experience and quality as Amazon. For these reasons, many investors are betting on the company to fail just 6 months out of its public offering. Over 20% of the WISH float is short. And exactly for these reasons, Reddit has decided to put effort into pumping the stock up, if only to spite those shorting a significant portion of the float. The result? WISH stock is an overnight sensation on the Wall Street Bets platform. Mentions of the stock on the message board have increased by over 4,000% in just 24 hours, while users are showing their hubris with massive investments in the stock. The retail trading hub is pivoting with incredible speed to the play after lifting off with GameStop and AMC. The trading volume alone tells you everything you need to know about retail traders' faith in WISH. Today's volume is eclipsing 130 million shares, a jaw-dropping figure when considering WISH's 9.5 million daily average. As mentioned before, the stock is now up nearly 40% since its low, trading hands currently at $11.50. But before we can come to the prediction at the end, we quickly have to talk about another very important aspect to consider: insider selling. In the last 12 months, the biggest single sale by an insider was when CAO Brett just sold 196K worth of shares at a price of about $20 per share. We generally don't like to see insider selling, but the lower the sale price, the more it generally concerns investors. So it may not shed much light on insider confidence at current levels. But with the massive hype from retail traders in mind, it shouldn't really matter that much. WISH's cheap price at 1.7 times this year's sales and revenue rising 10% to $1.9 billion in 2019, then growing 34% to $2.5 billion in 2020, are also justifying current jumps in price. Analysts expecting its revenue to grow just 24% to $3.2 billion would also explain why so many people are interested in the stock right now. The biggest reason that allowed WISH stock to gap up so much, however, is the mentioned short interest. So whether you should buy strongly depends on whether Wall Street Bets and retail investors continue to put the stock into the spotlight and buy it into new highs. Alright, with that being it for today's video, however, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot and see you next time.